When you hear these comments from the biggest of the big, is there anything to take away from the CEO speak, if you will?
It's a tough way to start the day listening to all of that, but I think we all know it. And, I think that the one thing you can get out of a smaller company, and by the way, we own many of those bigger ones too. The one thing you get out of smaller companies, a little more granularity, a little bit more conversations with management's chief credit officers about, different types of lending and how they're lending and how they see things. And obviously, as we've seen in this country, different, growth rates and declines of the virus itself. So, while one state is opening up, another one's shutting down. So you can literally, have very, very different reactions in different markets.
The overall markets have come back, as you obviously know, back to close to where they were pre-pandemic. The banks and the financials have not. Why not?
Well, if you really think about, other than the drug companies themselves, the most sensitive companies to a cure or to a vaccine are the banks, because then you do have that certainty. And the CEOs can say, well, we know what it is at the end of the tunnel. Right now, if you've got a loan on a hotel at a convention center, how fully booked is that convention center, if any bookings at all? And so you really don't know what your loss content is. You don't know when that hotel or convention center are really going to be running in any sort of capacity. There is no clear answer. And that's why they're setting aside reserves, because the economic forecasts are that muddy. And by the way, I think very, very importantly, the reserving methodology, particularly the bigger banks, is very different this year. And people try to compare it to the crisis. There's a new accounting standard called CECL, and it makes them set aside much, much more in the way of loan loss reserves. So if you look back and go, oh, well, they set aside this much, and look at how much they're setting aside today.
Yeah.
It's not that they see that. This is loss over the life of a loan. In the old methodology, it was more what you could see. This is stuff you can't see, and you're setting aside much, much more. And a lot of guys are setting aside kitchen sinks.
Literally 20 seconds in the show, Anton. Leave us with opportunity and some optimism. First, Busey. I assume this is a bank that has nothing to do with Gary Busey.
Well, they've got a very good wealth management unit, and as you mentioned before, you certainly have a big appreciation in the marketplace. And I like the Midwest. I think supply chain comes back. I also love First Horizon. They've got Tennessee. They've got big presence in Florida. Self-help story. A lot of cost cuts coming, and incredibly cheap to future earnings. And they have a broker-dealer as well, which, having a broker-dealer right now is a good place to be.